couple of high-level facts about the insurance market. Firstly, there is an insurance market for cyber insurance. As a matter of fact, as I speak today, there's probably something like 30-plus carriers globally who offer a standalone solution for cyber. In terms of global premium, that's about $1.3 billion at the moment, which is not a large amount, but it's growing very rapidly. The other thing to note about that figure is about 90 to 95% of that applies to US domiciled companies. So only a very small number of companies outside the US are currently purchasing cyber insurance, and there are certain reasons for that which we'll discuss a bit later. It is experiencing rapid growth, so it is double-digit growth in those markets, but it's a very immature market, probably only really going for the last 10 or 15 years. And as a result of that, there are two things that make, I think, the purchasing of cyber insurance quite difficult at the moment for most companies. Firstly, the wordings are non-standard. Now, for most of the commercial wordings that companies purchase, be it property, liability, whatever, they're all pretty much the same. Yes, there are some differences, but by and large, they're pretty similar. For cyber, that's not the case. We're all trying to do the same things, but we do it in very, very different ways. And that makes it difficult for insureds, and it makes it difficult for their brokers to really understand what is the best product for them. The second real issue is that the pricing is very erratic. So I was looking at a submission the other day, and the broker gave us some feedback. We'd quoted on this client. For a 5 million limit, cyber insurance, £5 million limit, the broker was getting quotes anywhere between £8,000 and £9,000 up to about £60,000. You know, that's a huge spread. And again, it's not something you get or something you see in an established insurance book of business. And the reason for this is because we simply don't have the claims data. We're getting that as time goes on, of course, with all the incidents that you've been speaking about today. But at the moment, there isn't really the data to do the actuarial analysis to determine what the right price is. And because essentially we're selling a product where we don't know what our major cost is. If you were to go away and design a piece of hardware, you could figure out what your design costs were, what the cost of all those materials were, and what kind of profit margin you'd need to charge. We're in the strange situation in insurance when we sell a product and we don't know what our major cost element is until 3, 5, or 7 years later. It's a bit of a strange, strange situation. Now, that's why we have actuaries, and actuaries do an awful lot of statistical analysis. They make various assumptions, and over a period of time we can test those assumptions to see whether or not the reserves that we put aside are sufficient to pay for the claims. But that's one of the things that's driving the growth in the market at the moment. What we are seeing is that, this works, yeah, just pop back there. What we are seeing is that frequency and severity are increasing. And even though we don't have the fine detail at the moment, that's fairly obvious. And the reasons, again, are fairly obvious. These are just some of them. When you have a data breach, be it from an external attack or an internal error, not only is critical data lost, and customers may lose confidence in that organization, you're going to have increased regulatory scrutiny. Certainly that's going to get worse as opposed to better in the future. Fines and penalties are increasing all the time, not to mention damage to reputation, lower market share, impact on profits, all the usual stuff. An interesting fact from the Edelman Privacy Risk Index seems to suggest that if you have a really bad data breach, you could be in danger of losing most of your customers. So I'm quite interested to see what's going to happen as a result of the Target breach that took place recently. In terms of cost, it's really difficult. As I've said, we just don't have that data in the industry at the moment. But there are companies that specialize in trying to gather this data, and they make it available to the insurance industry. Now, the Ponemon Research Institute is a company that produces these reports, and everybody in the insurance industry looks at these reports. when I looked at the 2013 report on the cost of a data breach to an organisation, I was quite surprised for two reasons. Firstly, the figures seemed quite low to me as the total organisational cost for a data breach. But when I looked into the report, I realised that this is because they deliberately exclude the very large breaches. And I think they partly do that because they can't get hold of the information, because most of this information is done as a result of surveys of companies that have had data breaches. And naturally, if you're a company that's had a very serious breach, you're kind of reluctant to give information on that to third parties. And the other thing, though, which is quite obvious, is that the cost is increasing all the time, and we know that frequency is increasing as well. They produce these, this is one for the UK, they produce them for the US, for Australia, etc. And certainly when you look at the US, these costs are significantly greater, but again, they don't include the big data breaches. The other major thing that's driving the take-up of insurance is legislation. Data protection legislation is the most rapidly evolving area of legislation globally at the moment. So just to give you an idea, as of March, I think Australia had their new data protection regime come into force. As of June, Singapore will have their new data protection regime. Hong Kong have had just an update to their regime. And in Europe, we all know what's been going on there. I'll very briefly mention that. But it all started in the US, as most things do when it comes down to liability insurance. And back in California about 10 or 15 years ago, a piece of data protection legislation that was introduced that had certain aspects to it. Firstly, it had an attempt at defining what personally identifiable information was. Secondly, it gave regulators much greater powers to look at companies and to find companies. Thirdly, and most importantly, it had a mandatory notification provision. So if any company loses a data subject's data, they have to notify them. And when it comes down to the US, that's where the big cost is. So when earlier I said about 90% of global premiums from the US, that's why. That's the primary reason. So Target's cost for that is going to be enormous. Absolutely enormous. The other thing about that legislation, which was quite interesting, was its extraterritorial reach. So as far as that legislation goes, a company is a company domiciled anywhere globally. If you sell to or you have any interaction with a Californian resident, you fall within the ambit of that legislation. Now that legislation as a template has been taken up now by about 46 states in the US, which is why it's just such a difficult place for us as cyber insurers. And that's obviously supplemented by federal law as well, which is quite stringent. Frequently I get submissions in from companies that are not domiciled in the US, that have no physical presence there, and they don't believe they've got any exposure. So most recently we had a business process outsourcer that fell within that category, but 50% of their clients were US clients, and they were handling huge amounts of US data. And when we broke the bad news to them, they were quite surprised at the amount of exposure that we believe that they had from a privacy and a data protection perspective. The EU, of course, has been rumbling on for the last 4 or 5 years, so the data protection regime is going to be updated in the next 2 or 3 years. Again, it's got lots of very stringent provisions. I won't go into all of them, but it is worthwhile noting that the amended text was agreed by the Justice and Civil Liberties Committee by, I think it was 49 votes to 3. This is a landslide agreement to that legislation. That figure I've got down there, 2% of turnover as a potential fine, has now been increased to 5%. The European Council were lobbied so much that they said, you know what, this is a demonstration that lobbying us can sometimes have a counterproductive effect. And so the potential fine now for European entities is 5%. That probably won't be voted in before the European elections, but it will certainly be here probably sometime 2015 and beyond. So the regime for companies operating in Europe is going to get very, very tough very, very quickly. And again, that's driving the interest in the insurance. As far as the UK goes, of course, we're part of that. But another thing which, again, sometimes clients don't realise is that when it comes down to things like notification costs, to a certain extent, they're already here. There's a piece of European legislation called the Privacy in Electronic Communications Regulation Directive, a bit of a mouthful, but basically it is for companies involved in the telecommunications sector, telecoms, ISPs, etc. And for those companies now operating in the UK, if their breach is bad enough and the regulator, the information commissioner, thinks it's bad enough, they now have to notify all those data subjects. So it's a potential cost that they have. So much for what's driving the insurance. What should the insurance cover? We really don't have time to go into that today in any great depth, so I just want to give you a very, very high-level view of what a generic cyber policy should cover. Firstly, who is covered? Obviously the company, employees, but also, most importantly, outsourced service providers. Most companies now, as you know, are outsourcing certain aspects of their IT infrastructure, be it application, software, platform, whatever. They need to be picked up by the policy as well. Triggering events, well, obviously loss of any data. Doesn't matter how it happens, if that company loses data for which they're responsible and they're sued for that, the policy should respond. Likewise for network security, if a third party feels that they've been impinged in some way because you've not made your network secure, the policy needs to pick up that as well. Regulatory investigations, of course, very important. And then we've got a few other things which we throw in, like media liability, cyber theft, cyber extortion. But what is covered? What are we actually going to pay? What does the policy pay? For all those triggering events, it should pay defence costs, damages, of course. Notification, I've mentioned a few times already, very important for the US. Fines and penalties where insurable. In lots of jurisdictions they won't be, but where we can insure those fines and penalties, we will do. The next one's the big one, which I'll talk a little bit about briefly, and this is business interruption. This is distinct from physical damage business interruption. This is purely business interruption consequent upon a cyber attack or an internal error or a failure to maintain your system, which causes an interruption to the business and a loss of profit. Now, hitherto, that is not something which has really been insurable in the market, and it's something which the cyber market is trying to take on, because standard business interruption will only cover business interruption consequent upon physical perils like fire, flood, etc., etc. It's another big distinction in the market as well, because not all insurers can offer that. It's only a handful that will offer non-physical damage business interruption. Ransom money, stolen funds, and last but not least, the cost of consultants. Most of our clients simply don't have the capability when they have a major incident to figure out what's happened and to put it right quickly. So we retain the services of information security specialists, probably quite a few of you in this room, to go in and sort out the problem for the client. We defray all those costs. We help them get the business back up and running pretty quickly. All those things are things that should be covered under the policy. This is a little bit more in depth. I'm not going to go into that. What I will say is that for ease of reference, what we do is we tend to group these covers into three broad areas. The first area is third-party liability. So this is quite simply any external entity or person who's suing you or your company because they think that you've lost their data, or you've compromised their system, or you've failed to do something which has caused their system to be compromised. We gather all that together in third-party liability, and that's where we cover the defence costs, damages, etc., etc. For these various things, privacy breach, data breach, media, network security, etc., etc. Sorry, I'm rattling through this a bit quickly, but I don't have very long. Third party, of course, we cover the notification costs and contractual penalties for breach of payment card industry data security standards. So there's cover for that as well. We then have the first party costs. So this is where you're making a claim on your own account as a result of an incident. So if you have an incident which has caused a business interruption, you would make the claim directly to us, and we'd cover it under this first party section. Restoration costs as well, of course, to get the business up and running again. Hacker theft cover. Crisis communication and consultants costs as well. And then finally, the regulatory costs. Looking at the European regime, I think this could be a very big area. The regulators are becoming and are expected to become a lot more active. So certainly if you look at the Information Commissioner Office's website in the UK, and you look at the fines that they've handed out, for the first 4 or 5 years, not many. In the last 18 months, most. That's when most of the fines have been levied. So the regulators are becoming much more active and are expected to become so. Again, any generic policy should cover that. So very high level, very quick run through. If you've got any questions, I'll do my best to answer them. Thank you.
Nigel, thank you very much indeed.